Welcome to another Coffee with Samso, where we talk with ASX companies and management as well. Today we're at the University Club in Crawley, and I've got Jon Hronsky here from Western Mining Services. Been chasing Jon for a long time, and he's finally given up some time to come on Coffee with Samso. Jon is a wealth of knowledge, and I'm just going to pass it on to him, and we'll have a conversation about what he's doing and his thoughts about the industry. So Jon, far away.
Well, thanks, Noel. Well, look, thank you for inviting me to come and have a chat. I really appreciate the opportunity to talk to you and to talk to the people who listen to you. I'm passionate about mineral exploration, particularly greenfields mineral exploration. I've just come up for 37 years in the industry, so it's sort of a long time. And I've been fortunate enough in that time to have grown up through the great, Western Mining Corporation sort of university of the industry, where we generated probably a whole lot of mineral explorers who've gone out to do significant things in the industry. The Chris Bonwicks who founded Independence, the Mark Bennett's who founded Nova. So being the beneficiary of that, and more recently, last 10 or 15 years, I've been consulting and director of junior ASX companies, and the last few years a partner in a industry-focused private equity group. So I kind of think what I can do is bring a broad diversity of perspective to the mineral exploration industry, having operated at a senior level in major mining companies, having been a director of junior companies, having been a partner in a private equity fund. I think I've seen quite a diversity in the industry, and I'm still an active geoscientific researcher. I was an author on about 4 papers in the last couple of years, and I'm still an adjunct professor here at UWA. So one of the things I've always been very passionate about is the interface between the scientific and the technical part of our business, because let's not forget that mineral exploration ultimately is a scientific business. There's a lot of sort of entrepreneurial and financial aspects to it, but the fundamental value is created by the science. So it's really about the interface, taking that science and interfacing it with commercial and practical business frameworks, and that's something that I've been very interested in.
Yeah, I'm glad you mentioned Western Mining. Obviously, for those that probably never heard of Western Mining, obviously they got taken over by BHP.
2005, Noel. Yeah.
And Western Mining was effectively a junior explorer, but they were actually a real explorer. They spent millions. They found a lot of big deposits.
A lot of greenfield success.
And Olympic Dam is another one.
Absolutely.
Had great success, and I've always had great respect for anyone that's got a resume that's got Western Mining. I sort of straight away turned the quality on, as opposed to trying to find the quality. And yourself, you've been in the industry, as you said, you're in big companies in managements and directors of juniors. Where do you see this market? Obviously, we've had this great run over the last 12 months, right? Fantastic run, money flowing everywhere, and hence equates to discoveries everywhere. From your 37 years,
Well, I will say one thing. It doesn't necessarily equate to discoveries every year. I actually think we are having a phase in Australian exploration history where we are seeing a lot of discoveries, which is a great thing. But I don't think it's just because the money's coming in. In fact, the money often comes in out of phase. You have the discoveries first, and the money comes in. But what I think the discoveries we're having here reflect is a renewed focus on fundamental greenfields exploration. So Australia, we made a lot of discoveries in base metals through the 60s, 70s, maybe into the 80s, then the 80s and 90s, a lot of gold discoveries. And then we had a period where we'd kind of depleted the search space. In other words, the deposits that were easy to find by the sort of exploration techniques we have were found. And we were now in a phase where we had to do the harder exploration. We had to look undercover. And I think we could only do that by changing the way we operate. We needed new ideas, new concepts, new technologies. And I think Australia sort of led the world in making the transition to that space. It's a little bit like the petroleum industry 100 years ago. People used to have, there's an outcropping tar sand, so we'll drill under there, we'll find oil. And then they realised, no, we've got to look for buried deposits. And they found things like Saudi Arabia, right? when they started to, they found the really big ones when they did that. And I kind of think that's the phase we're going through now. So yes, you're right, there's a lot more money coming into the industry right now, and that's largely driven by metal price. I mean, that is the thing that correlates with money coming into the, you can, it's actually, in some way, profoundly irrational that the availability of capital for greenfields exploration is a function of day-to-day, week-to-week fluctuations in metal price, but we don't make up the rules. That's the way the world works. Yeah. But that doesn't immediately correlate with exploration success. I think exploration success is something that sort of builds up, and we often see periods of very significant funding and expenditure not always correlating that well with exploration success, because sometimes that's not when the best work's done.
Yeah, I guess in some ways, going back to money and exploration success, do you think that because we've had such a bad run in the exploration sector for so long with funding, a lot of these projects had good exploration targets, but they were never able to test it till suddenly someone here's a bag of money, and then voila, it's like...
Look, I think that's absolutely right. So if you've got a project that's been sitting around and people have been exploring it through a downturn, that's probably a good project, right? And those are the projects that you want to see people investing in. As you say, now they've got the opportunity, they can do it, as opposed to a project where no one cared about during the downturn. All of a sudden there's a lot of money around, we've got this project, let's spend money. It's pretty important to separate those two categories, actually, Noel.
I think that's where I keep telling people, when in such a run last year, I kept saying to people that this is when you've got to be so savvy
more discerning. Absolutely.
And the two key things and we discussed this before, was technical and management, and that's very important, because, and like we discussed, we've seen many things go bad, and very few that have done well. And I think in a market running like that, you've got to be even more careful.
Oh, absolutely. In a hot market, you have to set your filters higher, because you know that when there's a lot of money available in the market, there'll be a whole lot more people trying to bring on projects that perhaps don't deserve it to try and get some of that money. So quality is important, and I think you make a very good point that the typical investor really can't judge the technical merits of a project, and that's probably not worth trying to do even. But what they can do is they can look at the quality of the team, and I think even quite sophisticated institutional investors use that as a way to decide who they're going to support, or what projects they're going to support and what projects they're not. Yeah.
Which leads me to probably maybe even 12 months or more, I met up with Moho, and I looked at their projects, and obviously they're a bit sort of scattered, and then suddenly I saw your name there, and I thought, hang on, if John is doing this, there must be more to it. So I approached Ralph Winter, and we've had a long association since. But I'm really curious. I mean, when with the Empress Springs, because it's literally a greenfields project. It is.
Absolutely, it's a greenfields project. Look, I got approached by Moho. I wasn't involved with the original targeting of the project. That was Douglas Haynes, who's another fairly famous ex-Western mining geo. In fact, he was associated with the targeting of Olympic Dam. And he had done some work, and this project had ended up in the portfolio of the Independence Group. And I can't exactly remember now, Moho was earning an interest and how that had happened, right? But they had come up with this, very conceptual but very interesting project. And they asked me to put it, one of the things I do for my clients is I put projects into a regional scale conceptual metallurgenic context, where you can say, yes, this is a good project, yes, it isn't, and yes, if it is a good project, this is probably the part of the project that we should focus on. So and this was before their IPO, so they asked me to look at this project, and I was pretty interested in what I found. So without getting too technical, I could see that this project was associated with this granite suite of rocks called the Esmeralda Super Suite. And what was interesting about it to me is that there was a study that Geoscience Australia had done about 20 years ago, and they're our national geoscience agency, and they had looked at the Proterozoic granites of Australia and tried to identify which were the really fertile, interesting ones and which weren't. And of course, the most interesting ones had come up with Roxby Downs granite, which hosts the Olympic Dam system. And what was interesting is they only found one area where you actually had that similar sort of geochemistry, and that was the Esmeralda supersuite. So this was a report they published in about 2001, and I thought that was pretty interesting. It's very different what you see. So, you know, this target is totally undercover, but it sits not far away from an area where there is a bit of outcrop, and it's the Croydon area of Queensland. In the Croydon area, there's a number of gold, you know, there were some gold deposits. Some of them were mined in the 80s, and there's also some tin deposits. And what became quite clear was all that mineralisation was associated with this Esmeralda supersuite, which is broadly the same age as Olympic Dam, right? So a lot older than a lot of the other things you see in that part of northeastern Queensland. So, you know, for those who are more technical, Olympic Dam's about 1590 million years old, and this is about 1560 million years old. So that was interesting. Getting slightly more technical again though, these didn't look like the classic Olympic Dam where you have a lot of magnetite, you have a lot of hematite, and that was because it was the same magmas, but they had become reduced because they'd come up through a big pile of black shale, right? So as a result, they were more gold rich, they had tin, they didn't have the copper, they didn't have the iron. And when you looked at it that way, it's like, well, this is like the Olympic Dam province, but with a different flavour. But fundamentally, like coming out of the mantle, this is probably the same sort of rock. So that was pretty interesting. And so we looked at the project area, and you could see also that that there was some, you know, one of the things I always use in my targeting is what I call translithospheric faults. The fundamental cracks, the fundamental breaks through the lithosphere, which is the outer shell of the Earth. They're basically the pathways, they're the plumbing system, they're the pipes that fluids and magmas that make ore bodies come up through. And you could see, yes, this was a great intersection of those structures. It was probably the position where, you know, sort of what's now northeastern Queensland merged with the rest of Australia, you know, 1.5 billion years ago. So I looked at that and I thought, yeah, that's an interesting spot. And of course then Moho had their IPO. And they were able to, it's a big area, they did some drilling, and very early on got some pretty interesting encouragement at the Arrow prospect. You know, I think it was something like 20 metres at a gram gold and some zinc. Now, that didn't immediately translate into a deposit, but I think that was just a small part of this overall covered area. And more recently, and I think pretty excitingly, because, you know, one of the challenges is, Noel, you're exploring undercover, right? How do you do it? You can drill lots of holes, but that's expensive, right? You need to use other methodologies. Now, the problem with gold, as opposed to, you know, maybe copper or nickel, is we can't really use geophysics. We can't get like, here's a geophysical anomaly and we can just drill. You've got to look at geochemistry, right? Anyway, so they had the bright idea of looking at water bores, because, you know, this is all station country, right? And there's a lot of water bores. And they sampled the water bores, you know, for everything, for gold, and this is working with CSIRO. So they got, you know, that's our national science agency, and they've got some real specialists in this sort of what we call hydrogeochemistry space, guys like Ryan Noble. So they came in, they did this sampling, and it has generated a very large coherent gold anomaly where this existing prospect is part of it, but the anomaly is much larger. And look, I've been working a little bit over the last few years with hydrogeochemistry, and I have to say this is the largest, most coherent anomaly that I've seen. So it's pretty interesting.
Oh wow!
Yeah.
I mean, I guess in some ways, you know, the rawness of the project is the attraction.
Oh no, absolutely. So one of the things about mineral exploration is it's all about opening up a new search space, right? It's all about going where no one's gone before. And the interesting thing about that is when you open up a new search space, the first person usually finds the biggest deposits because they're kind of the most obvious. So, you know, that we call it the first mover strategy. So if you're genuinely first mover into a new area, that offers an upside potential, which is vastly different than, say, you know, developing another gold mine in an existing well mineralised area, right? You can find the really big things, yeah.
It's a bit like Olympic Dam, I guess.
Oh, absolutely.
You know?
Olympic Dam, it's interesting, think about this. So in 1975, the first hole into what we call the Stewart Shelf today, you know, the covered part of the Gawler Craton, biggest deposit found, right? Now, subsequently, there's been a whole lot more deposits found, but Olympic Dam, that was still the big one, right? So you go in first, you find the big one.
Yeah. I guess the big one gives, in terms of like cover and signatures, well, normally you have the biggest signature.
Correct,
right?
absolutely. That's exactly the reason, Noel. You know, within any new search space, so if we say, well, the only way we're going to find something under this cover is to drill holes, well, the bigger deposit will be the easy one to find, because, you know, it'll have the biggest footprint. Yeah.
I mean, as I mentioned to you before, I remember, the first time I met you was going back 30 plus years. I was second year lab, you were the supervisor. You probably don't remember me because
I do, yeah, but anyway.
So, I didn't know a hell of a lot at that time, as I guess most of us at that point in time.
We've all got to learn.
Yeah.
And we've all got to keep learning, by the way, Noel, over our lives and our careers.
That's why this platform works well, is that, you know, the likes of yourself can come out with 37 years experience, who've been there and done that, can come out and just give it the summary, and then suddenly we're all geniuses, right? We can go out there and find things. But I remember your upside down lightning.
Oh yes, yeah.
I really want you to share that with us, because I thought that was like you know, lightning bolt kind of story.
Well, I've actually been doing quite a lot of work over the last decade or so, thinking about mineral systems and really thinking about a fundamentally different way to think about how ore bodies form and how they work, right? And can I just give a bit of context for this, Noel?
Yeah, definitely.
Yeah. So if you think about natural sciences and how they work, they typically start off with a whole lot of observations, and then people classify it. It's what I call the taxonomic phase, meaning, you know, it's this category and it's that category. And then you move on to some real actual process understanding. So if you look at biology, right, we started off in the 1700s, it's like species, and Linnaeus, it's this species and Genesis and whatever. And then we had Darwin come in with evolution, and then we had DNA, and we started to understand why it happened, not just what happened. And I think if you look at mineral deposits, and 20th century ore geology was very much about, this is that type of deposit. So this is a porphyry deposit, and that's all its characteristics. And this is a VMS deposit, and this is an orogenic gold deposit. And some of that was quite useful, particularly at the deposit scale. But what it wasn't helpful in doing is tell you where the next one was. So while we had a world where you basically had prospectors walking across the earth looking for surface expressions of mineralisation, once they found it, those models would help. But what those models don't help with, Noel, they don't help with finding the next one. And I guess the thing that became clear to me is a lot of people studied the details, all these chemical processes, but if we really wanted to understand ore bodies, there was a really fundamental thing they all had in common, and that's that we had to take a bunch of fluid, now it might be a magma or it might be hot water, it didn't matter, from a big volume and push it through a small volume. And what I started to realise is there's actually a very limited number of scenarios where that can happen, because, you know, you've got to really organise these systems. And we started to see that ore formation occurred only in these narrow windows. And I guess the key insight was, how do you organise flow of fluid through the crust? You need a barrier, right? You need a barrier. You need something where the fluid's kind of flowing in slowly, but it's like it can't get through, right? And what happens then? Well, pressure builds up, and then bang, it breaks. But the key point is, where does it break, right? Breaks at the weakest spot. So breaks at the weakest spot, everything goes up that weakest spot. So all of a sudden, you've got a mechanism where you can take a broad diffuse fluid flow, if you like, the background situation, and translate it into a focused fluid flow where you can actually form an ore. Because, you know, fundamentally, you want to make a gold deposit, you've got to take atoms of gold that start off at 1 ppb or 2 ppb in a big volume of rock and move them into a small volume of rock where there's several thousand ppb, right? And you've got to concentrate. And the only way you can do it is by concentrating the fluids that have moved them. So how does that happen? So the lightning analogy was to say, well, you know, what happens during a lightning storm, I think, is very much like what happens when you're making an ore deposit. So what happens in a lightning storm? Clouds, you know, static electricity, charges build up. So we get a gradient, a voltage gradient between the cloud and the ground. But you don't just have continuous electricity flowing through. Why? Because, you know, air is resistive, right? Current doesn't flow through air very easily. But at some point, it overcomes the barrier and then bang, it all goes down to one spot, right? So that's kind of ore formation. You turn that upside down, you've got the fluid building up, and it fails, and bang, these are like lightning bolts going up, going up to the surface, still going to the ground in that case. And it helps you start to understand that these things occur on different time scales as well.
Yeah, I've always said that, and the weakest subject of my undergrad was structural geology, which so happens to be the most important part of geology. So,
well, it does, but I think a lot of classic structural geology misses a lot of these points. So,
yeah.
So, yes.
Everything works in cohesion.
Yeah.
But its structure was the controlling system in some ways, right? You still got to find it.
Yes, absolutely.
Yeah, you can't work
It's
backwards.
about pathways, right?
Yeah.
So I like to say, 20th century approach, people study the details of all these chemical processes going on, and yet we can predict with the same set of concepts a whole range of different deposits. And why is that? Well, lots of different chemistries, but there's only one physics, right? So that's why if you want to be predictive, which we do, that's what exploration targeting is about. Being predictive is about focusing on those physics. To do the chemistry, you need lots and lots of information. You can pretty much probably only say something after you've already found the deposit and drilled out.
Correct.
That's not what we want. We want to say, where can we find the deposit? To do that, we have to understand the physics.
Yeah. I mean, that's good, because in when we talked about Moho and Empress Springs and things like that, I can understand the methodology or the madness or whatever in terms of how you do it. But when we talked before about with the strategy of your other companies where you're on board, like Encounter, I like that strategy, right? Because a lot of people don't get it who are new to this game. They think it's you got to find to the end product, but it's not. Right?
No.
So can you share that with us?
Well, Encounter, which as you've said is another company that I'm the director of, has a very clear strategy which we call the project generator model, and in that model we apply our conceptual thinking to acquire ground, particularly on the basis of new data coming out from the government. In Australia, we're very fortunate. We've got a government that spends probably $100 million a year on pre-competitive data, so that's fantastic. And we identify those opportunities, but we know they're early stage. We know they need a lot of capital. So our strategy is then to partner with larger companies who need those opportunities. So it's a symbiotic relationship, because they need, it's not going to turn the dial, these large companies, your BHPs of the world, Newcrest, finding something small. They need to find the next major province. And if you don't find the next major province next door to Kalgoorlie, right? You've got to go somewhere new and interesting. So that's really the opportunity that we provide. Yeah.
So on that note, like we've had, I actually drove on the weekend down to Boddington, but Boddington's been around for 30 years. It's one of the, not the largest gold mine in Australia, right? But yet that region is only Boddington.
Yeah.
You don't get that, Leinster and all that developing, right?
Yeah. Well, I think the Boddington, the Saddleback Greenstone Belt is a relatively small, geological unit that's preserved in there, but. So it looks like the rocks that could host the Boddington type deposits are somewhat restricted.
Yep.
But I guess one of the interesting things, though, that we are starting to see through what we used to call the Western Gneiss terrain, the part of the Yilgarn Craton closest to Perth, is we are seeing some interesting discoveries coming through now in an area that, because a lot of it is just wheat belt, no one looks at, but you're seeing Chalice's Julimar discovery, Caspin, which is another company, Caspin Resources, another company I'm a director of. We've got a interesting nickel prospect at Yarrawinda, and we're now seeing Liontown come up with some pretty interesting intersections north of there in terms of gold. So that could be actually, bizarrely enough, an exciting new province opening up almost on our doorstep. Yeah.
I mean, we've had the wheat belt story for quite a while now. It's not new.
Yeah.
I mean,
No.
Julimar's new.
No.
But you've got the maze and then you had Exploring having that.
Yes, that's right. That's right.
So suddenly everyone's go, oh, maybe there's more to it than
Exactly.
you know.
Yeah.
And going back to our initial discussion of people having these projects but no funding, and at that time people go, you won't find the chance that you find it is low. So
Well, it's very, very hard, isn't it, in a junior company to get money off the market for going somewhere new where there's not a lot of known mineralisation. So if you like, particularly because the market is sometimes a bit naive, the easiest place to go is, look, someone else has already found some gold, so give me some money and I'll find some more gold there. Yet the reality is the upside of those opportunities are probably capped compared to, here's a completely new province, here's a good idea. That's where you're going to get your 10 baggers, your 100 baggers or whatever, So, look, it's one of my great sort of disappointments in life that the risk capital market doesn't understand the value proposition in greenfields exploration. But I understand it, because the problem is that you've got to know, gets back to what you said, is this a team of people who really are trying to find a deposit, or are they just trying to take advantage of the lifestyle miners, right? And it's kind of not always that easy to tell that difference.
Yeah. I mean, I like when we mentioned about the exploring, and then they had Tampere and all this.
Yep.
And it's been there for donkeys, and the sort of the wheat belt exploration is, like you said, potentially if you find something, it's a 10 bagger.
Yeah.
Like the Mohos of this world.
Absolutely.
And Julima, who would have thought that Charles was going to find Julima?
Well, the thing is, until you make that discovery, you don't. That's the thing about greenfields. Like, you're sitting there at 5 cents, and all of a sudden you're $5.
Yeah. I mean, it's the money. I've always said to people that when you go chasing brownfields, you're talking 50, 100 million, and if it goes bad, that's 50, 100 you've lost.
Correct.
Whereas if you went and tested a scenario, it could be 500,000, and if it went bad, you've lost 500,000.
Look, I think that's exactly right. So, one of the things that I get a little bit annoyed at, Noel, and you've kind of got me on a bit of a hobby horse with that last comment, but this idea that people say, the greenfields exploration is high risk. We're finding some advanced project where there's already been a lot of drilling is low risk. Now, I don't think that's true at all. If you define risk as the probability that your shareholder's dollar is going to get a return. Now, advanced projects often cost you a lot of money to get into, right? Often. And then there's a lot of things that have to go right to make them happen, and the upside is not that great. On the other hand, so if you look at the average return across a portfolio, sometimes it's actually quite high risk. On the other hand, early stage greenfields, very little money for each individual roll of the dice, big upside if you get it.
Yeah.
So over a portfolio, I don't think it's necessarily high risk at all. The problem though is you have to filter out, and this is the biggest individual challenge for an investor. It's a bit like betting on horse races. You've got to know which horses aren't trying, right? Okay.
Yeah.
So if you can only bet on the horses that are trying, I actually think, individually, the probability of an individual greenfields project working is not that high. But as a portfolio, I think particularly going through a phase like we are in Australia right now, where we are seeing a real revival in the rates of greenfields discovery, as a portfolio, if you're a patient investor, I think you've got a lot of exposure to upside.
Yeah.
But filter out the horses that are not trying.
Yeah, I think in some ways it's now we're at a point where the science play a lot more than the neurology. In the 80s and 90s, where like you said, the easy stuff was found.
Science is important. It's interesting you say that. So I was involved about 15 plus years ago with founding the Centre for Exploration Targeting, which sits on this campus and has done really good work. And it's designed to provide this kind of support to the industry, very industry focused. Now, if you're a junior mining company, you can participate, you can be a member for a few $1,000s. And yet it's interesting to me that there's a bunch of, what I would consider the really good junior mining companies that are members, but the vast majority of them aren't. And I kind of say, for a few $1,000s, if you were serious about exploration, why aren't you a member of the CET? So I'd suggest that perhaps that's a bit of a heuristic for investors to look at. Yeah.
Oh, I think now going forward, that's more important in trying to find things than maybe 20 years ago, because I think now suddenly, like you said, things are deeper. You're chasing things that are under cover and all that kind of stuff. But look, John, it's fantastic. Look, really appreciate you giving time. I hope we can do this again.
Sure.
We could go on for hours,
Yeah.
and you have lots and lots of little things to sort of share with us, which I know a lot of my followers and viewers, they do ask for these things and they look for this. And I'll do encourage to make comments, and I'll make sure Jon gets them, and you know, and any I'm pretty sure Jon is will answer questions. And
Sure.
Again, thank you, and
No, thank you, Noel, for the
next
chance to
time.
talk to you and to talk to your viewers. So,
Fantastic.
And yeah, let's do it again sometime.
Great.
All right. Cheers.
Cheers.